From the trading desk of dailyforex.com, this is Christopher Lewis looking at the upcoming September 10th Forex session in the Euro US dollar. As you can see, Friday produced a very bullish outcome for the Euro as we shot straight up. This was predicated mainly upon the Federal Reserve being painted into a corner that they simply have to get involved in some type of quantitative easing. The jobs number was just absolutely horrible out of America, and the fact that the ECB looks set to buy bonds, this should stabilize the European region for a while at least. Of course, in the long run, that will weaken the euro, so this move is obviously more to do with the Fed and less to do with anything relating to stability in Europe. However, the technicals do not lie, and although I am long-term bearish of this pair, I have to admit that breaking out over the 127 level is significant, and we are currently at the very, very end of any type of resistance that could have been formed here. For me personally, I think it's a pretty clear shot to 130. Probably will be made over the next several sessions. A pullback, however, since we are at the 61.8 from the fall, isn't completely out of the question, and in fact would be welcomed by the bulls, giving them the ability to buy the euro at a cheaper price, probably right about the 127 handle that I just mentioned. I think we do have a fairly clear shot to 130, but this descending triangle that kicked off a lot of action in this pair is sitting up here and waiting at 130, so I think that's about as far as this move can go. Once we get bearish action at 130, I wouldn't hesitate to turn around and flip the trade to the downside. I think eventually the markets will pay attention to the details or lack of coming out of Europe when the bond purchases are concerned. And as such, I think we do go back down. Europe's in a recession, so longer term, I am still very bearish this pair, but it's obvious that we have a couple hundred pips to go first.